Good morning, everyone. It's 8:01 a.m. Chicago time, 9:01 Eastern on Tuesday, the 27th of June, 2017. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance today is risk off. Um, uh, Looks like crude's leading the pack at 43.87. It's rallied above the last 3 days worth of consolidation and is up 1.13%, 49 cents. Followed by the Euro FX. The Euro's at 113.33, up 101 pips or 0.9%. Then comes in, gold comes in third. Remember, gold had that small kind of flash crash type of thing on high volume yesterday and is making a comeback. It's trading at $1,250.80, up $4.40. The laggard today is the DAX, followed by the Euro stocks and the US dollar. Most US indices, except for the Russell, which is up 2 points, are down. So essentially, the overall market stance is risk off. The FTSE's down, the DAX is down, the CAC is flat, the Euro stocks is down. Overall, Asia's slightly down. There's not much more I can report on that. Just take a look at your calendar or to online resources to see what's up. At 7 a.m. Central today, 8 a.m. Eastern, OPEC had a press release that said that currently not having any real discussions regarding deeper cuts in supply. At the July meeting in Russia, delegates could discuss further steps to support the market. At 8 a.m., which is just about 3 minutes ago, 8 a.m. Central, 9 Eastern, we got the April S&P Case-Shiller index came in at 0.28% versus 0.5. So slightly off year on year, 5.67 versus 5.9 expected. As far as what we're expecting for today, I'm looking for the Richmond Fed at 10 a.m. Eastern. This is a low tier number, not likely to be a mover. But at the same time, we're getting U.S. consumer confidence index for June, looking for 116 there. Overnight, there's a parade of ECB speakers at 4 a.m. At 4 a.m. Eastern, we got ECB speaker Draghi. At 4:05, we got Fed speaker Williams. At 4:30, ECB speaker Kerr. And then we had the BOE speaker Carney at 6 a.m. At 7 a.m., we had ECB speaker Prate. And then today at 11 a.m. Eastern, expecting Harker, Fed Speaker Harker. And at 1 p.m. Eastern, we're expecting Fed Chair Yellen. And then at 5:30 after the close, expecting Fed Speaker Kashkari. So that's what's on deck for today. So that's where we stand for today as far as the calendar is concerned. Let's take a look at what we expected yesterday versus what we got. Yesterday was pretty interesting. None of the key hypotheses, the first and second hypotheses, worked out. The third hypothesis ended up playing out, which I didn't draw. I really had a strong expectation yesterday built on the action that we've had, the strong push-up, pullback, consolidation. The expectation is for a continuation higher. But instead, we got what looked like a hypo 2 push up. We had a hypo 2 push up, and then we sold off into 35.50. Here's what we got. Actually, I'm sorry, I'm mixing days. Hypo 2 actually worked out yesterday. We had a strong push up, then we filled in the gap right here, the gap zone that we had put in the morning, and then we pushed down into the prior day's point of control down to 35.50. We went to 34. 35.50 is your MC point of control. We pushed to the prior day's close, 34.50 by 2 ticks. and then we bounced back up. I saw an opportunity for a long in here. Took a long time. I didn't end up holding it to its intended target of 24.42, but it did end up working out. I also saw the mid short, but I was discouraged by the mid short given that it would be outside of the prior day's range, which is this green line, and basically the prior 3 days ranges. And the only backup it would have is the open and the IB. So I didn't believe that was a high probability short. It ended up working out. It pushed through by 3 ticks, and then rotated over. And now we're trading down at 24.3350. 24.3350. This impulsive move here on the 15-minute looks like one move from 24.4750 down to 24.34. This looks like the pullback. The mid held, so there's a higher probability that this low is likely to get taken out. It could not be taken out in the day session. It ended up at 24.35 and closed at about 24.35.75. So the overnight, however, had no buyers in it and it ended up sliding further into this 3-day consolidation. So if we take, I'm going to put a composite within a composite. If we take what we've done since the gap up, okay, and look at where we are, what we've done, not including yesterday, you'll see that there's a low volume node here at 24.40 and a half, which is where we struggled yesterday a little bit. And the point of control again is at 24.35.50. And if I move this further up to only look at the last 3 days, we can see what is in play. So here we are. We can see what is in play underneath, and you can see that the market has slipped underneath the value area of this 3-day template or 3 days of balance. The market's testing on the other side, has tested on the other side and is bouncing back up to 24.34 and is likely to open in that 24.35 area. So overall, we were not able to continue the push higher to break out of this balance, to extend this balance a little bit higher. The market's in a balanced condition. As I include the extra volume that was kicked in yesterday, we are basically in the same spot we were in yesterday, except we are trading just below yesterday's range. So that's how we ended up in the on the close yesterday in the overnight session. Here it is. The volume's pretty normal, 158,000, a little on the heavier side. But what we had yesterday is a pullback and then the continuation move overnight. Very slow, but we see the continuation overnight. I'm expecting the market to make this a base for a return back up to 38.50 for a test up there. But overall, the overnight session tested below and is failing to hold on. It's teetering right on the edge of yesterday's range. So this morning, I need to leave here in a minute. So this morning, the expectation is for the market to open in an open auction out of range or slightly in range, open auction, test lower, push up into 35.50, consolidate, test 38.75, push through to the 40.50, and then hold steady into the close. I expect the market to recover some of the area that was given up yesterday and to get back into this zone right here. That's the primary hypothesis. Now, if we open down here and we get responsive buying into the prior day's range, and then we fall back out, we start to move away. In other words, we break the opening swing low. Then I'm looking for it to drop, pull back, continue, push through to 27.25, then find its bounce back into the 34.35 area. That's hypo 2. So overall, I'm expecting a balanced condition once the market tests But the expectation is for the market to be responsive, test down, and then push back into yesterday's range all the way up to, the key target will be yesterday's point of control, the most traded price in the area, 38.50, with a target of about 24.40.50, which is the composite LVN, and 24.41.50 is the extended target on Hypo 1. Okay, that's how things are shaping up. Good luck today. As always, just don't forget that coming into the end of the week, we're approaching the Independence Day holiday here in the U.S. Independence Day is Tuesday, the 4th of July, next Tuesday, a week from now. Monday, the markets are open, normal hours. But the expectation is that volume will be very light, very little trading going on. A lot of people are going to take this chance to take off early on Friday and be gone for 5 days at the cost of one holiday, or 4 days at the cost of one holiday, right? So expect it to really slow down coming into Friday and into Monday and Tuesday. Tuesday, the markets close at 1:30, 1:15, 1:30 Eastern. In the futures, the equities will be closed all day. Good luck, and I'll catch you tomorrow. Take care.